Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. That's going to be Megan Brantley, Vice President of Research at Likefolio. Welcome back to the show, Megan.
Thanks for having me, guys.
All right, so we're talking DraftKings. The stock's down about $11 from over 2-year highs just in the last month. There's some news out on this one, but what kind of data do you guys have? Because DraftKings over the last 12, 15 months has been on a pretty good run.
Yeah, whenever we look at just overall online sports betting as a macro trend, we see increased adoption in 2024. We've seen a lot more exposure just in terms of legalization rollout. I think that now DraftKings, as of its last quarter, it was live for at least 49% of the U.S. population. So it's growing in large part because legalization is expanding its access for consumers, and it is actively rolling out in these markets. And this isn't the only player, though, for sure. Another major player that we watch in our universe is FanDuel. Those two tend to be used pretty synonymously among users. We actually see a lot of users who talk about using both interchangeably, just depending on whatever sport they're betting on or, whatever promotions the two may have running at the time. But it's interesting because for the first time, whenever we look at web visits, traditionally, DraftKings has been the major leader in our universe, and now we're starting to see things kind of swap a bit. And you can see on this chart, those are web visits, and for the first time, FanDuel is coming up on top of DraftKings just in terms of overall consumer mind share and growth. So some of this could be due to promotional activities that FanDuel is running that is attracting more attention to its site. But all in all, just something to watch for us because we do see a bit of a slowdown in growth for DraftKings and a bit of an acceleration for a competitor like FanDuel. However, both of these two are the major players in this market. And just at an overall macro level, we expect this to continue to, the increased adoption of online sports betting to be a tide that's lifting both of these boats.
Megan, I mean, this is a pretty dramatic chart you have here because if you look back, it was pretty smooth and even, and all of a sudden there's a big cross between these two. Is there some big change? I mean, both seem to be doing pretty well. Both are adding more states and the cost of acquisition is going down and they have more customers on their platform. But the question I ask the Likefolio a lot when we have something like this is, who's winning? Is FanDuel starting to win and turn into the Home Depot versus, I guess what I'm saying is in terms of betting, which is Home Depot and which is Lowe's?
It's really tough. I think it switches a lot. And part of that is just because this is so competitive and it's so important for these companies to be able to attract and keep these consumers engaged. They spend enormous amounts on marketing and promotions to kind of reel in consumers. And then hopefully as the market matures, they keep this consumer. The consumer spends more and they become more profitable. And they have to be really competitive. And so for us right now, the way we look at this is it looks like FanDuel is just being a little bit more competitive. Most of the mentions that we look at talk about the promotions that FanDuel is running. There are some mentions of consumers who say that they like FanDuel's platform better, that maybe it's a little bit easier to use. But overall, what's really interesting is if you look at happiness, the two are neck and neck. They're exactly even. So it doesn't necessarily look like one has a massively superior user experience. And it also shows that we don't think consumers are really loyal to a platform. This more shows that consumers are opportunistic. And so perhaps FanDuel has some better promotions and marketing activities going on at the moment. We think that's the major driver of that split you see there. But it is a significant shift. So it's something that we're watching to see if this continues and what the ramifications look like, especially when both companies report earnings next quarter.
Yeah, they reported at the beginning of May. Stock
August 1st.
Yeah, and then the stock kind of rallied into mid-month, and they came out with Illinois, of course, us here in Chicago, our legislators approved, a hike in taxes up to 40% rate on operators as far as online gambling, which has hurt the stock. Into the end of May. We've seen a little bit of a rebound. But, Megan, is this based, if you look at this and the outlook for this company, acquisition costs are high, but once they get them hooked in, the margins start to increase. But is this all going to be based on the fact that, hey, we're just waiting for California, Texas, and Florida to allow gambling, and then it's a It's a free-for-all, and margins and their footprint will increase even more.
Yeah, when you think about the fact that DraftKings is really only present in half of the U.S. population, that shows the potential market for growth and expansion. And so this is definitely, this macro trend still has a lot of gas in the tank, if you will, and a lot of room for future exposure. But taxes are certainly a headwind. I think that Illinois brought in $1.5 billion in tax revenue last year alone before this increase, and I think there are other states that are exploring following suit. So this could weigh on that long-term goal for that permanent profitability. I think that they're eyeing that in 2025, at least DraftKings is. But if this pushes things back a bit, if increased taxes weigh near term on costs, then that may be negatively impacting how some investors are looking at this stock. We would expect some volatility, but long term, we do expect this macro trend to continue to accelerate. At least that's what our consumers are talking about. They enjoy being able to participate in sports this way, and I think that DraftKings and FanDuel are certainly the two largest players in the universe that we're tracking.
All right, great stuff, great data as always. Appreciate it, Megan.
Thanks, guys.
All right, that's Megan Brantley, Vice President of Research at Likefolio, breaking down the data for us. Pretty positive commentary from them and their data, Kevin.
Yeah, the good news is